Hello friends, today I am going to discuss the fourth head of income in income tax, that is income from capital gains. So I am going to discuss the four basic concepts, that is what is the definition of capital gain, what is a capital asset, types of capital asset and computation of capital gain. So let's see the meaning of capital gain. So as per section 2 subsection 14 of the Income Tax Act, capital gain means any profit or gain arising from transfer of an capital asset is taxable under the capital gain. See, the definition is very simple. If a person is generating any profit or gain by transferring an capital asset, that whatever the profit or gain he or she is generating, that will be taxable under the head income from capital gain. So you must be thorough with what is the meaning of capital asset, what all will be considered as a capital asset. So let's see what is the meaning of capital asset. As per income tax, property of any kind held by an SSC is called a capital asset. What is the meaning of any kind means, the assets are divided into different categories as per on the different basis. So it may be fixed asset or current asset, tangible asset or intangible asset. Any asset held by an SSC is called an capital asset. That means, so you got the meaning of capital asset. Now see the definition. If a person, if a SSC is generating any profit or gain by transferring this capital asset, the income whatever he is or she is generating will be taxable under income from capital gains. But under income tax, few of the capital assets are not considered as capital assets. So what are the few assets? Let's see. So any stock in trade or other consumable raw materials, clothing and furniture, agriculture, land in rural India, special bearer bonds, national defense bond, etc. There are so many examples are there. Few of the things, these assets are not considered as a capital asset. That means if an SSC is earning any profit or gain by transferring these assets, whatever the income he or she is earning, it won't be charged under the head income from capital gains. Now let's see how many types of capital assets are there. So the capital assets are divided into two different categories. One is short-term capital asset, another one is long-term capital asset. So if an SSC is transferring this short-term capital asset and earning any profit or gain, that profit or gain will be named as a short-term capital gain. Or if an SSC is generating any profit or gain by transferring this long-term capital asset, that income will be called as long-term capital gain. See how we have to differentiate whether the asset is short term or long term means we have to see the holding period. What is the holding period means? We have to see the period between the date of purchase to the date of transfer. So we have to check the holding period to differentiate whether the asset is a short term capital asset or long term capital asset. So now let's see, if a person is holding this land and building which is an immovable asset for less than or equal to 24 months, then that capital asset will be called as short-term capital asset. In the same way, if a person is holding any unlisted shares for a period of 24 months or less than 24 months, then the capital asset will be considered as a short-term capital asset. In the same way, all the other asset which he is holding, which she is holding for less than or equal to 12 months, then the asset will be considered as a short-term capital asset. Coming to the long-term capital asset, the holding period, you have to check if it is an immovable property, land or building. You have to see if the property is held with the SSC for more than 24 months, then the capital asset will be called as long-term capital asset. In the same way, if the SSC is holding this unlisted shares for more than 24 months, then it will be called as long-term capital asset. In the same way, all the other capital assets, if the person is holding for more than 36 months, then the asset will be called as long-term capital asset. So this is how we have to differentiate whether the asset is short-term capital asset or long-term capital asset. As I said, if a person is generating any profit or gain by transferring any short-term capital asset, it will be called as short-term capital gain. If an SSC is transferring any long term capital asset and he or she is earning any profit or gain, then it will be called as long term capital gain. So now coming to the computation part of computation of short-term capital gain. So your problem starts with the sales consideration. What is a sales consideration means? By transfer of that short-term capital asset, whatever the amount you are getting, that amount will be called as sales consideration. So your answer starts with the sales consideration. You have to take the sales consideration in the inner column and you have to deduct the expenditure what you met for the transfer of that particular short-term capital asset. You have to deduct. After deducting this expenses from the sales consideration, the amount and net amount whatever you will get will be called as net sales consideration. You have to take that amount in the outer column. After that you have to give two deduction, that is cost of acquisition and cost of improvement. After deducting these two things from the net sale consideration, the amount what you will get will be called as gross amount. From there you have to give deduction under section 54 to 54 GB as per income tax. So whatever the amount you are going to get after deducting the deduction from the gross amount will be called as short-term capital gains. So what is this cost of acquisition? What is this cost of improvement? I will explain in the next part. So coming to the next one. So this is the pro forma for short-term capital gain. Let's see the pro forma for long-term capital gain. So the pro forma will be same. See the computation of long-term capital gain. Particulars amount. Your answer here also starts with the sales consideration. The sales consideration means by transfer of this long-term capital asset, whatever the amount you are getting, it will be called as sales consideration minus expenses. The amount what you will get will be called as net sales consideration. From net sale consideration you have to give deduction. You have to deduct indexed cost of acquisition and indexed cost of improvement. These two things also I will explain in the next video. That means in part 2 I will explain. So if we deduct these amounts from the net sales consideration, the amount what you will get will be called as gross amount. From gross amount we have to give deduction under section 54 to 54 GB. So if we give the deduction, the amount what you will get will be called as long-term capital gain. So this is the pro forma for long-term capital gain. So now let's see what is the tax rate. So now coming to the tax rate, actually we know that income tax is taxable at a slab rate, but we have three special rates. One is long-term capital gain, another one is short-term capital gain under section 111A, and we have another special rate that is in income from other source, that is in fifth head we have. So as of now we have two special rates, that means 20% and 15%. These two are the special rates where the income whatever we are earning from these two things, it is taxable at a flat rate. See, long-term capital gain, if an SSE is earning any income under this long-term capital gain, it is taxable at a flat rate 20%. That means, for example, let's take an SSE is earning 20,000 from this long-term capital gain. The tax liability will be, we have to calculate directly 20%. That means 4,000 is the tax liability. This is how we have to calculate at a flat rate. In the same case, short-term capital gain under section 111A. If it is mentioned under section 111A, then the tax liability is at a flat rate of 15%. So and the last one is short-term capital gain. If nothing is mentioned, so it will be calculated in a normal slab rate basis only. So we have learned four concepts in this income from capital gain. We learned what is the meaning of capital gain and what is the meaning of capital asset, what all the assets which are not considered as a capital asset, and we learned how many types of capital assets are there and how we have to differentiate the short-term capital asset and long-term capital asset on the basis of holding period, and we saw what is the computation of short-term capital gain and what is the computation of long-term capital gain. We saw what is the pro forma for both of the things, and we also saw what is the tax rate for this income from capital gains. So thank you for watching, and I will discuss, don't forget, I will discuss this indexed cost of acquisition, indexed cost of improvement, and cost of acquisition and cost of improvement, how to compute that thing in the part 2.